want to thank y'all for watching the Capital Mindset. Here we teach you how to build your life capital. In this video, we will discuss mortgage rates. Generally speaking, mortgage rates are the cheapest loan that you will ever have in your life because a house loan is viewed as one of the safest types of loans. But how are mortgage rates set and why are they now so high compared to just a couple years ago? And which direction are they heading? Are they heading back up or are they going to head back down? All interest rates tend to follow the federal funds rates, which are set by the Federal Reserve. Now you can think of the Federal Reserve like America's central bank. The federal funds rate is the target interest rate at which commercial banks borrow and lend to each other. Right now, that interest rate is at 5.5% in this month, February 2024. So all loans will have to be higher than the federal funds rate in order for banks to make any money. Here's an example. If you need a loan to buy a house, you might go to your local bank. That'll be Bank A in this example. Your bank will generally borrow from another bank or financial institution. This will be Bank B. Now, Bank B is required by the Federal Reserve to lend to your bank, Bank A, at the Fed funds rate. Your bank then lends the money to you to buy your house. But your bank will lend it to you at 7.5%, only making 2% interest off of your loan, not including your down payment, which would be somewhere between 5 and 20%. So why will your bank lend you money at such a cheap interest rate? They're only making 2% off of it. It's because they don't keep your loan. They package your loan up with tons of other loans and mortgages, and they sell them to larger banks and institutions. We'll have to go over that in another video. The reason why mortgage rates are now at 7 and 8% interest as compared to just a couple of years ago when they were at 2 and 3% interest is because the Fed has been aggressively raising interest rates in order to slow down inflation. That's also another video. But right now, the Federal Reserve is holding interest rates steady at 5.5%. And they're holding them steady because the economic data suggests that inflation is coming down. So which direction are mortgage rates headed? Although we can never be 100% sure, it looks like inflation is cooling off. And the Federal Reserve is keeping their finger on the trigger, just in case our economy goes into a recession. Right now we have several countries around the world that are slipping into recession. And our government doesn't want our economy to slip into a recession. So my guess is interest rates will probably be coming down at the end of this year. Unless we somehow get a worldwide panic and we have money poured in from other countries around the world. And as their money is pouring into our economy, it will cause inflation to go up. So it looks like mortgage rates will probably be holding steady these next few months, and my guess is we'll be coming down towards the end of this year. If you've enjoyed this content, please join us on Discord at The Capital Mindset, where we teach you how to build life capital.